Coming to closing entries. Now students, just to recall a simple accounting principle, that is matching concept, it says that to calculate the profits and losses of a year, we must deduct the expenses out of the incomes for that particular year. So for this purpose, various accounts of expenses are required to be closed. So now students, let us understand what entries are made to close accounts of expenses and incomes. First of all, coming to direct expenses. Direct expenses means expenses which are directly related to manufacture of goods or sale or purchase of goods and services. So any kind of direct expenses are closed by transferring them to trading account. So entry in this regard would be trading account debited to opening stock to purchases to wages to carriage inwards. You can always have freight in place of this, that is freight inwards, to power, and any other direct expenses that are given in the question. So remember, direct expenses are closed by transferring them to trading account. Similarly, any receipts like sales etc. are also closed by transferring them to trading account. So entry for that would be sales account debited to trading account. Now students, you must understand one thing, that in case there are returns like purchase returns and sales returns, these accounts are closed by transferring them to respective accounts. Like for example, purchase return is there. So purchase return is actually closed, purchases return is closed by transferring it to purchases. That means by deducting it out of purchases. So entry would be purchase return account debited to purchases account. Similarly, in case there are sales return, then sales return are actually discussed or closed by transferring them to sales account. So entry in that case would be sales account debited to sales return account. All the direct expenses are transferred to trading account. But what about indirect expenses? Remember, indirect expenses are closed by transferring them to profit and loss account. So entry in this case is profit and loss account debited to expenses and to losses. In case losses are there, this is individually. Now by individually we mean that, let's say there are 5 expenses: rent, salaries, carriage outward, then interest, then commission. So you will record them separately as P&L to rent, to salary, to commission, and so on. So all these expenses would be shown individually. Similarly, in case there are certain incomes, then the entry in that case would be revenues or incomes debited. In case there are gains, then gains debited to profit and loss account, again individually in both the cases. That is, all the headings of revenues and incomes should be recorded individually. So now students, in case there are direct expenses, they would be transferred to trading account. but all the indirect expenses and incomes would be closed by transferring them to profit and loss account through these journal entries.